Both political and financial worlds are eyeing the upcoming U.S. presidential race, which really ramps up on Monday with the Iowa caucus. Looks like this year we could see a rematch between President Joe Biden and former President Donald Trump. For more on what economic impact we could expect to see from either of those candidates, we're joined now by Derek Holt. He is Vice President and Head of Capital Markets Economics at Scotiabank. Derek, thanks so much for joining us.
It's a pleasure, Jacqueline. Thanks. So
this is an interesting one. When you're looking at the presidential election in the U.S., just, first of all, what's the sort of biggest economic impact that Canadians should really be, most aware of, potentially?
Sure thing. There's a key trade-off here. If, on the one hand, say Trump, who is the leading candidate according to all the polls, he's the runaway victor already in terms of securing the Republican nomination, it seems to be, in terms of the greatest polling advantage over all of his candidates that we've seen over in Republican caucuses dating back decades in time, then I think the effects on Canada could be quite mixed if he is the ultimate victor after November. On the one hand, he would probably pursue tax stimulus that over time could generate a stronger economic growth in the United States that could back into Canada. The unfortunate problem is that he also raises trade tensions. If he goes ahead with his plan to raise a 10% tariff on all imports from everywhere across the world, a more aggressive stance than he had in his 2016 platform, and that he partially delivered upon during his first mandate, then a trade-dependent country like Canada could be right back at square one in terms of having to renegotiate and offer some concessions in order to avoid such a scenario.
Yeah, I've wondered about that one. And when I've heard about this 10% tariff, his plans for that, and wondered how that actually would work, seeing as we do have NAFTA.
That's very true, and it could just be the so-called art of the deal. He comes in, huffing and puffing. At the end of the day, the only aim is really to attract a few political concessions. I mean, NAFTA 2.0 or CUSMA or USMCA, whatever.
Right, the USMCA. Really my mistake there. Yes.
No, yeah. It's the concessions at the end of the day really didn't change that much. I mean, we secured for the most part a trade agreement that's still compatible with the overall interests in terms of growth across NAFTA. It changed more for Mexico than it did for Canada, in my opinion. So I think we can still have some cautious optimism that this is all about optics and that we'll get through it. And at the same time, however, we still have real policy risks to Canada if the Biden administration becomes victorious after November. His tax plans, I think, would have a very deleterious impact upon U.S. economic growth, and that wouldn't suit Canada either.
Yeah, give us a sense of what you've looked at when you're, examining Biden's time as president and the sort of economic impact that he's had.
Sure. Okay. So there's, in terms of explaining what has happened in terms of Trump's polling success relative to Biden on the path to November, I think there's an economic argument to be made. I mean, we can avoid the character issues and all the other stuff. We can get down to brass tacks in terms of economics. Biden promised his base that Bidenomics would improve their fortunes, and it didn't. And some of that was due to unfortunate circumstances with the pandemic. It generated inflation and all sorts of nasty consequences. But some of it had to do with his response to it, and a response that is ongoing. He drove federal government program spending that is about 1/3 higher still to this day than it was before the pandemic. The deficit in the U.S. is over 6% of GDP still to this day. U.S. public debt has gone up 50% now compared to before the pandemic, and a lot of this having to do with extraordinarily strong government spending led by the Biden administration. So his base is sitting there saying, well, the impact of all of this was to raise inflation, not just because of the pandemic, but in longer-lived fashion. It drove our borrowing costs higher on top of it all. And for lower income to middle income households, these two things, higher inflation and the inflation tax and higher borrowing costs, have particularly regressive effects. It's not necessarily the upper income earners, the millionaires and billionaires who get dinged with those outcomes. It's right strike to the middle of Biden's base. And that explains why support support within his own party, Democrats and Democrat-leaning voters, according to the Pew Research Center, has collapsed by about 30 percentage points in terms of his approval ratings now versus early 2021.
This is a really helpful context as we sort of head into, the race ramping up here, Derek. You mentioned inflation, so I do want to touch on inflation just a bit here. We got U.S. data, the consumer price data yesterday, producer prices today. But I was also thinking about how the possibility of, these airstrikes in Yemen by the U.S. and the U.K., escalating tensions there, the possibility that could, fuel costs, whether it's shipping costs or perhaps oil prices as well. We did see a spike today. I wonder what you're thinking on the inflation front, the global inflation front, and what possible pressures we might see from some of those events.
Well, you're bang on to flag geopolitical risks, and on two fronts. One is what's going on in the Middle East, and we've seen a significant rise in shipping costs, global shipping costs, and some of that's going to have to get passed on if it persists and becomes even more problematic. And for a trading nation like Canada, that could be a particularly acute force. We're more sensitive to it given the greater role of trade in our economy than, say, the United States, given trade as a share of GDP. I'd also watched the developments in Taiwan over this weekend, the presidential and legislative elections tomorrow, and how they may impact market tensions into the Monday market open and thereafter. If the leading candidate succeeds, he has taken a bit of an agitating stance toward relations with China and a desire to build up military expenditures, and China has threatened to either invoke economic policy measures against the island or perhaps we'll see a return to the ships and planes buzzing around the island. And so I think those two things are going to cause a lot of ongoing tensions in supply chains. We haven't escaped that part of the picture yet. And then layer on all of the Canadian narrative stories behind why, in my opinion, inflation risk is higher in Canada than it is in the United States.
Okay, so tell us a bit about why, Derek, because we are going to get a new inflation data for Canada out next week.
Sure. Okay, Jacqueline. So it's I'm expecting a drop of about 0.3 month over month to seasonally unadjusted CPI on Tuesday. Adjusted for seasonality, I think it'll be up 2 or 0.3. The key will be the trimmed and weighted median measures. So the central tendency price pressures, when they popped higher in mid-December, that began scaling back market pricing for a cut as soon as the March or April meeting. If we get another one like that again, then I think it would push even further back upon any nearer term Bank of Canada cutting. But this is in the context of a country that's totally different from the pressures in the United States. Immigration is a much more powerful driver in Canada relative to our housing shortages than it is in the United States. Wages are growing much more rapidly in Canada than in the U.S. Productivity is much weaker in Canada than the U.S. Collective bargaining is cementing wage gains at 2 to 3 times the Bank of Canada's 2% inflation rate for years to come. It's a much more important driver in Canada, where 1/3 of workers are unionized, than compared to the United States, where 10% are unionized. And so add up all these lists, as well as an undervalued Canadian dollar versus relative strength in the U.S. dollar, ongoing fiscal stimulus here. And I think with inflation expectations toward the high end of the Bank of Canada's target range and above, and I think you have a legitimate case to be worried more about Canadian inflation and how it's changing behavior than in the United States.
Yes.